and that's with gold, which is a much bigger market than silver. So if they switch to silver stable coins, and already we're running out of silver, then that might be the thing that gives us triple-digit silver right there. When Tether comes out with a silver stablecoin and it meets with enthusiasm in the market, then boom, you get that parabolic move. So, so it's interesting to see cryptos moving over to precious metals, which was always going to happen, because when you become a crypto fan and you start learning about crypto, it's been a long, hard wait for silver stackers out there, basically 10 years of underperformance. And then finally we're getting the kind of move that always seemed likely for silver, because the silver story was always awesome. It's a monetary metal. It's an industrial metal. We're running out of it for those uses, and a silver squeeze is inevitable. And that was the 2015 story. So it took a long time to come to fruition, but it is finally happening, and silver's finally rocking. So yeah, I think this is real. It's long overdue, and it's nowhere near done yet. I think the dynamics in the silver market right now point to much higher numbers over the next few years. Well, silver is in deficit, meaning the world's silver mines don't produce as much metal as industrial users and investors demand. So we're running through above ground stocks. And a lot of the kind of discontinuities that we're seeing in the silver market right now are due to the fact that the big exchanges like COMEX may not have enough silver to satisfy the demands of futures contract holders. In other words, there are a lot more people out there with long futures contracts that could come in and demand silver than there is silver to satisfy that demand. And, the number of people who are standing for delivery on futures contracts is rising. And the amount of silver in these exchanges is shrinking. So you're seeing, sometimes games are being played. There was that when the silver exchanges went down for a while because there was a quote unquote cooling issue, just as silver was going up like $3 an ounce, and things like that. And that is kind of normal in squeezes. The exchanges will do a lot of weird things to keep from having to default. But in silver's case, it may not be possible to avoid some kind of a default where there just isn't enough silver, and so they have to pay out in cash instead of metal. And a lot of people are looking at that as kind of the inflection point where, okay, it's going up, and then there's this default, and then it goes straight up. And there are people out there who are buying on that prediction, that in the not too distant future, we get a serious upside discontinuity in silver. And you want to be there for that. And I think that's certainly possible. I'm not predicting it for the next 6 months or the next 2 years or whatever, but I think that it's definitely on the list of things that could easily happen given the dynamics in this market. So, I'm not selling any of my silver that I've laboriously stacked over the last 10 years, because I think the real fun is still to come. And, you don't want to wait a really long time in a dead market and then finally have the market turn around and you get out too soon and miss the big move that you've been waiting for. So it's intellectual and emotional right now, that you should probably stick with your silver positions and watch this thing play out.
Silver is now operating in a persistent physical deficit. Global mine production cannot fully satisfy industrial consumption and investment demand combined. As a result, the market has been drawing down above-ground inventories. This imbalance is increasingly visible on major exchanges, where available deliverable silver continues to shrink. Meanwhile, more futures holders are standing for physical delivery instead of cash settlement. That mismatch creates stress. In commodity history, such conditions often lead to volatility, rule changes, or forced cash payouts. These distortions are not unusual in tight markets. They are symptoms of scarcity revealing itself.
It's not too late to add to positions. It'd be much better if you did that in the past 5 or 10 years. But yeah, if you don't have as much as you want, or you're, new to the market, then you can definitely be adding. Just do it a little at a time. Do lowball bids for silver mining stocks, or dollar cost averaging with silver ounces, whatever. But don't jump with both feet, because that'll be the day that something happens to cause a correction and silver will drop by 30%, just as you buy in big. So all you can do and sleep at night, in most cases, is to continue to accumulate gradually and just look for good deals on the expectation that your target price is, let's say, $200 with silver. So if you end up buying some at 70 and buying some at 80, it might be very painful if there's a correction back down to 50, but you'll still feel good about what you've done when silver finally reaches that real exit point of in the hundreds. So yeah, it's no longer easy money. That the easy money has been made, but the silver market is probably still a favorable place to be for all the fundamentals that we could spend an hour just talking about those.
When a long-awaited bull move finally begins, emotions intensify. Chasing prices feels tempting, but it is often costly. Silver remains volatile by nature, capable of sharp pullbacks even within strong uptrends. The most resilient approach is gradual accumulation, adding exposure over time rather than betting everything at once. This reduces regret if corrections occur while preserving upside participation. Investors who waited years only to exit early often miss the defining phase of a bull market. The goal now is patience with structure, steady positioning, realistic expectations, and the discipline to let the thesis fully unfold.
So the silver stocks are having a nice run, and there really aren't that many of them, because most silver is mined as a byproduct of other kinds of metal mining. If you have a nickel mine or a copper mine, you'll make some silver and you'll sell it, but it's not your main business. So there aren't that many silver mines. And now that silver is a hot topic, if you're a mining company with silver in your name, you're attracting some generalist money. Mining is a highly leveraged business. In other words, an increase in the price of silver leads to a bigger increase in the operating profits and cash flows of a well-run silver miner. So you got that operating leverage there too. The price of silver is going up, and then the cash flow of these silver miners should go up even faster. And that's a really nice it's a really nice combination of trades, which you don't see that often in the world. And you certainly don't see them out there right now. There are very few industries where you've got this kind of upward arc in basically everything good. And that's where silver is right now. So the silver miners, there's still some potential 10-baggers out there in the explorers. And there's still 3 to 5 baggers at every level of the silver mining complex. So yeah, I think that, again, lowball bids, dollar cost averaging. Don't just buy stuff at the market with all your money. Buy a little at a time at prices that are as favorable as you can get in this kind of a market, and then just assume you'll spend a few years positioning yourself and hope by that time the real parabolic move is ready to happen.
Unlike gold, most silver is mined as a byproduct of other metals, meaning pure silver producers are relatively rare. This scarcity magnifies their appeal during rising silver prices. Mining businesses also carry operating leverage. When silver prices rise, profit margins often expand much faster than the metal itself. That dynamic creates asymmetric upside in well-run producers and explorers. While risks remain, the opportunity set is unusually attractive. Across the sector, there are still companies with multi-year growth potential, especially for investors willing to research geology, management quality, and balance sheet strength.
So gold has had a really nice run. And this is different from the previous 2 gold bull markets, because this time around, we're kind of repricing the whole world in terms of gold. It's becoming the humanity's money again. And that means that if we start thinking in terms of what gold prices necessary for the world to go back on a gold standard that is viable, then you get some very high numbers. So gold still has further to run if the BRICS are going to launch their gold-backed currency and the other central banks that are adding to their gold holdings keep it up. And if the crypto guys with their stable coins decide they want to launch a bunch of gold-backed stable coins, then the demand for gold is going to be such that, you get up into what seems like crazy numbers right now, $10,000, $15,000, $20,000 an ounce. And again, that's something that looks like sounds crazy now, but it's very possible going forward. So gold is still a thing to buy, but it has had a better run than silver up until just lately. And now silver's starting to pick up and outperform gold. And historically, that kind of signals the last year or two of a precious metals bull market. I think this time it has different factors animating it. And I don't think the precious metals bull market ends until governments get their act together. And so right now that's not happening. Every major government is running massive deficits. In other words, adding massively to its debt, which increases its interest costs dramatically, which increases future debt and deficits. So they're still in the death spiral phase of this. And until they start raising interest rates to, 1980s level, 20% on the Fed funds rate, 16% mortgages, things like that, unless they bite the bullet and do something like that, then we're still destroying the world's fiat currencies. And that means that gold, when priced in those currencies, will continue to go up. So I think we still have a nice long run in gold, and we have a potentially better run in silver, which you're kind of seeing evidence of right now. And again, same thing with gold. You can continue to add. And there are lots of gold mining stocks out there. There's way more gold mining stocks than silver miners. So you have more choice out there of big, solid companies that will just, give you the gain in gold with minimal risk. And then a lot of explorers and small producers that aren't really well known yet, and that still have 5 or 10 bagger potential out there. So it depends on how deeply you want to dig into this market. If you really want to get to know how mining works and spend 6 months developing the judgment to tell one little miner with a good story apart from another, there's some serious potential money to be made.
Gold's role is evolving beyond a traditional hedge. Central banks continue to accumulate it, and discussions around gold-backed trade mechanisms and alternative settlement systems are becoming more frequent. If global finance slowly re-anchors toward tangible reserves, gold prices may need to rise significantly to support that transition. Numbers that once seemed implausible begin to look mathematically reasonable when measured against global debt and currency supply. Historically, silver tends to outperform gold during later stages of precious metals cycles. Today's environment may extend that pattern, but with deeper structural forces driving it.
Okay, well, a stable coin is basically a financial instrument that is created when someone buys a bunch of something and stores it, and then issues stable coins against that vault full of whatever. And then those coins trade on a blockchain, which means instantaneous transfer of funds. You just have zero friction in what you do with those instruments. So it's a very attractive concept technically. The crypto people who have a ton of money still, even with Bitcoin getting smacked lately, there's still a ton of money in the crypto space with which to pursue things like stable coins. And, there's even people in the Trump administration who are talking about the future of finance being stable coins. In other words, everything will be on a blockchain at some point. Okay, but one of the big stablecoin companies, Tether, has been buying a lot of gold and investing in gold mining stocks, and now they have gold bullion on a scale that puts them in the league of small to medium-sized central banks. So that's just one stablecoin company. There could be many more. And that's with gold, which is a much bigger market than silver. So if they switch to silver stable coins, and already we're running out of silver, then that might be the thing that gives us triple-digit silver right there. When Tether comes out with a silver stable coin and it meets with enthusiasm in the market, then boom, you get that parabolic move. So, so it's interesting to see cryptos moving over to precious metals, which was always going to happen, because when you become a crypto fan and you start learning about cryptos, it turns you into a gold bug by implication, because to understand cryptos, you have to understand money. And once you understand money, you realize that today's monies, today's fiat currencies, are just cheap imitations of real money, and that historically gold has been real money. So you gain a respect for gold while you're stacking your Bitcoins. And so crypto guys and gold bugs are natural allies, because they have a common enemy, which is governments that aren't constrained by any kind of a link in their money to something real. So it's not a surprise that crypto money is flowing into precious metals now. And so you're seeing an interesting thing happen where precious metals are still going up, while cryptos are having a monstrous correction right now. Bitcoin is down from 120,000 to 85,000 right now, which is a big drop for something that is supposed to be digital gold. And meanwhile, gold is up again today, and silver is having a really nice day today. So I think there are capital flows happening here, where some of the money that's moving out of cryptos is moving into precious metals. We'll see whether that continues, but so far it's a very encouraging sign. I don't have the slightest idea where and why Bitcoin does what it does, because I'm kind of an old school gold bug, and I just do not get the concept of cryptos on a scale that would let me, put a lot of money into them, or think of them as the base money of the future financial system, just because, they don't have a physical existence. They literally don't exist. They're bits of code. And that's not to say that they won't end up being really important parts of the future financial system. It just means that I don't understand how it's going to work. So I don't express opinions about it, because, it's just not my wheelhouse at all. And I wish those guys luck. And I think there's room for high quality cryptos, which is to say Bitcoin and gold and silver, in a future monetary system, that we could have them all doing different things, or complementing each other in certain ways, and that would be fine too, just as long as it takes gold and silver up to their intrinsic value, which is way higher than today. I'm happy with however else it turns out.
An unexpected ally is emerging: digital finance. Stablecoin issuers and blockchain-based systems increasingly rely on real-world collateral, including gold and potentially silver. Some major players already hold bullion reserves comparable to smaller central banks. If silver-backed digital instruments gain traction, demand could accelerate rapidly in an already constrained market. At the same time, capital appears to be rotating as cryptocurrencies experience volatility while precious metals strengthen. This convergence is not accidental. Understanding digital money often leads investors back to physical value. In that sense, gold and silver are not outdated. They are being rediscovered.